Energy and financials. 40% of the stocks in the S&P 500 down at least 2% today. So very tough day. Look at oil extending its losses into a second straight day, closing at the lowest level since October. Crude falling in the regular session, $2.94, settling at $87.82 a barrel. But guess what? It fell precipitously in the aftermarket, more than $3. And a big day in the bond pits with that 10-year yield falling to its lowest level ever in history being recorded. The 10-year ending the day at 1.62%, down 12 basis points. The yield hit an intraday low of 1.61%.
Let's start out by covering all of the various fields here. We have Larry Shover in the pits of the CME Group. Howard Ward, he is not afraid of Facebook's fall. He says you should own a piece of this thing. He is actually buying the shares. And Mark Faber says today is just the beginning of a greater worldwide stock sell-off. He'll tell you how to protect your money even in the worst of times. He's joining us in a moment, but let's start with Larry at the CME. Larry, let's start with oil. What is this sell-off in oil telling you about the overall market here?
Well, what it's telling us is that the market was caught totally unaware with what happened in China overnight. Keep in mind, China finally threw cold water over any inkling of doing a stimulus package like they did 3 years ago. They're not going to do it. And with that combined, the dollar rallied. So those two things combined, oil is going to go down.
Larry, oil down, but a lot of other commodities getting hurt, too. The one thing that really showed some muscle was the U.S. dollar. This at a time when there's a massive flight to quality. You just saw from the 10-year bond yield. But the dollar, as it pertains to everything else, didn't it really seem to be holding the leash of the entire markets?
It really did. And just keep this in mind that the market actually acted pretty well, considering that the 10-year yield's at 1.62. I think the narrative right now, it's like a broken record market. The narrative hasn't changed. We have Spain going to the liquidity hospital with all the rumors of what's going to happen in Spain. We have the Greek elections coming up. I think right now people are just really nervous, really anxious, and the 10-year yield is the only place to go right now.
All right, let's go over to Howard Ward. He is from Gabelli Funds. Howard, let me ask you, first of all, about your Facebook call. You're not saying that it's necessarily going to go through the roof, but you're saying that you should have a piece of this in your portfolio, and maybe now is the time to buy in. Is that right?
Yes, we bought a few shares today. I think at $28 or $29, you're getting a nice discount from the $38 IPO price. And I think this company does have an extraordinary opportunity to become the place for display ads on the web over the next couple of years. There will be an army of software developers that will help them to get that right. And also in mobile, there will be an army of people helping them to get that right.
Now, we're showing some breaking news that Dow Jones sources, Dow Jones saying that the Facebook IPO disaster was due to technical problems, not any kind of rules that were being broken. And looks like Morgan Stanley might be in the clear according to those lower thirds. But does that clear the way at all for some more optimism for this company? As you say, a lot of smart people there got it to where it is today, 900 million members. At some point, they're smart enough to figure out how to monetize this thing.
Yes, I mean, this was a very sloppy IPO. Unfortunately, there were a host of problems. I think it was overpriced at 38. We didn't put in for shares at 38 for my accounts or my funds. And at 28, it's a different story. But it stumbled out of the blocks. It's gotten a little bit of a taint. It will overcome that. I mean, this company is very young in its history, and it's got a very bright future.
Now, Howard, we are about to have Mr. Doom and Gloom himself. We're going to be talking to him in just a second, Mark Faber. But you say that our markets are kind of stuck until we find some kind of resolution with the European banks. But are European banks in the same position that our banks were in terms of being highly leveraged and decapitalized back in 2008? Is that about where Europe is right now?
Well, yes, and in some situations they're worse. And so
let me just focus on that. Yeah. How could they be worse than that?
Well, the amount of leverage involved in a number of the banks in Europe is far in excess of what we had here.
Wow.
And in Spain, of course, the concern is not with the government debt per se, but with the banking debt and the assumption that the government will have to assume the banking debt. And so my fear right now is that we are in the early stages of a run on the banks, not only in Greece, but in Spain and elsewhere. And it's critical that they stop this and stop it now. Time is of the essence. I am afraid that they are taking too long to do this. And when you think about it, every time somebody submits an idea on how to solve the problem, someone else stands up, raises their hand, and says, sorry, we can't do that. There's a rule that prohibits it. So it's as if they've created this system that can't be saved from itself.
let me take it to Larry in the pits. You know, Howard is saying, we just put it up on this gigantic board that says, really, the perception even of a run on the EU banks is incredibly frightening to the regular investor. You know, in the pits, how closely are you guys watching that?
Well, they're watching it very closely, but the thing is, people are just shocked and surprised that we're not down a lot further than we are, given all the rumors that are coming out, especially with banks, especially with Spain becoming another Ireland, $350 billion in bailout. Who's going to do that? It's going to deplete Europe. And so really, even though there's a lot of carnage behind me, people are thankful it's not a lot worse than it really is.
By the way, Howard, it may seem like small potatoes compared to a European bank collapse, but we are expecting a ruling on Obamacare coming up in June on that individual mandate. You say that that ruling could affect the markets. How so?
Yes, well, my personal reading of the situation, which of course may be flawed, is that Obamacare will be overturned as the individual mandate will be viewed as and held as unconstitutional. I also believe that when the Supreme Court takes these decisions into account, they look at the will of the American people. And in this case, the majority of the American people seem to be against Obamacare. And the majority of the states, we have 26 states actually suing the administration in the Supreme Court in order to prevent it because they can't afford it.
But how could that affect the markets?
I think it will be the next major catalyst that we see to see stock prices move higher.
Thank you, Howard. Good to see you. Howard Ward is portfolio manager at Gabelli Funds. Larry, we'll see you in a few minutes for the S&P futures close.
Well, investor worries sending the 10-year Treasury yield to even another record low today. It doesn't seem that there's any bottom to this, but does this flight to safety signify more trouble ahead?
Mark Faber is the editor of the Gloom, Boom, and Doom report, and he's joining us now. I mean, listen, a lot of people said, thankfully, the bell rang because it was a very tough day, especially when you look at that flight to quality into U.S. Treasuries, specifically the 10-year, but also the U.S. dollar. How much worse does this get? We were just talking with Howard Ward about the problems in the European zone banks, et cetera. Does it get worse and worse and worse? And what might turn it around, Mark?
Well, I think that the market has actually not acted all that badly because the news over the last 10 days has gotten worse and worse out of Europe. But the market actually bottomed out on May 18th. And I think the market is very oversold at the present time. Sentiment is very negative. The US dollar and bonds are very overbought. So we could have a counter-trend rally. But I don't see a huge increase in stock prices. And as I said before, if we had a new high on the S&P, in other words, above 1,422 in the summer, say in July, August, I think a crash would likely follow in the fall, in other words, in October, November, and bring stock prices down very meaningfully.
Well, you actually think that we are at the tail end of a rally that began in March 2009, don't you? I mean, March 2009, that's when the Dow was at 6,000, the S&P was at 600. Are we going back to those levels, you think?
Maybe we're not going down to those levels, but I think we can easily drop below 1,000 on the S&P. Don't forget that the S&P has outperformed just about every other market in the world over the last 12 to 18 months, because most markets, even some indices in the US, peaked out on May 6th of 2011, and then went down into October and then rallied again, and only the US market made a new high. Most other markets around the world didn't make a new high. So if we look at all the markets in the world, then we have to say the S&P has actually outperformed the other markets, and there is a non-confirmation by other markets compared to the S&P, which is a negative sign.
Well, Mark, then what is the point of being in stocks at all? I'm going to play the contrarian side here. We still have companies, Apple, Intel, that are making products. People are buying them. Then say, for example, in SAP, they've hit record numbers. You're telling me that it's pointless to be in companies that have good names and good quality businesses?
No, I'm not saying that. I'm saying that they also can go down because earnings can also disappoint. If you print money, as has been printed in the US, over the last 2, 5, 10, 20 years, it's very beneficial for corporate profits because it flows mostly into the coffers of companies. but eventually the money printing stops and then corporate profits don't grow anymore. And we have many problems in the world. Europe is not going to grow. China is slowing down very meaningfully. This impacts all the commodity producers. We've just had a new low in oil and in copper today. The industrial commodities are very weak. It's a sign that the global economy is actually slowing down very meaningfully. And in my view, with almost certainty, we'll be in recession within a year.
A global recession. By the way, in such an environment, as,
Yes.
as Liz pointed out, you say there aren't many stocks that you'd be interested in one way or the other. Are you just putting all your money into gold right now? I know you prefer the actual
No,
physical
I'm not,
gold,
no.
don't you?
I like physical gold, but I think we're still in a correction period. But like the stock market, I think gold has been oversold and we could rebound. I would own some shares, but not with the view that they make new highs, but with the view that maybe in shares, you're better off than in sovereign bonds that will go bankrupt, that can't pay the interest.
Mark, you know, you have the most wonderfully devilish laugh of any
yeah.
guest we've ever had. If there is ever a role for Mephistopheles, you would be the person to play it. Don't you agree?
Well, I think the attitude of investors going forward should not be thinking how much money I can make, but how little can I lose and what strategy do I deploy not to lose 100%. Because the people that are listening to people to tell them to buy Facebook, I think there is a chance they'll lose a lot of money even at this price.
Mark Faber.
There's that laugh. Mark Faber, we love having you on. Come back anytime. We appreciate it.
Thanks for being here. You know, that was very Vincent Price-esque.
Thank you.
Yeah, it is.
Right from
It
the
is.
thriller right at the end. Apple CEO says he's gearing up for brand new products, and guess where he wants to make them? We'll tell you out west, take you there to All Things D conference for the answer.
Also, with oil prices hitting the lowest level of 2012, we have somebody to tell you how to make money in energy stocks, but you might need a strong stomach for some of these places. Stay tuned.
Okay, so Facebook shares, yes, they saw more red today. The company getting approval, though, to expand its headquarters. We've got the details on that next, and as we go to a break, let's take a look at some of the other social media stocks and how they performed today, along with the Dow losers, of which there were many.
The Closing Bell is sponsored by TD Ameritrade, where a smart game plan starts with smarter trading tools.
What if you had thermal night vision goggles, like in a special ops mission? You'd spot movement, gather intelligence with minimal collateral damage. But rather than neutralizing enemies in their sleep, you'd be targeting stocks to trade. Well, that's what Trade Architect's heat maps do. They make you a trading assassin. Trade Architect, TD Ameritrade's empowering web-based trading platform. Trade commission-free for 60 days, and we'll throw in up to $600 when you open an account.
Shivani Joshi, technology.
Netbooks, laptops, desktops, and we have a tech bonanza.
Charles Payne, money.
This one had a whole lot of momentum. We want to start to help people make money.
Expert insight, smart analysis, only on Markets Now, weekdays.
Jim is 38, mortgage, married, 3 great kids. He wants to protect his family with a $500,000 term life insurance policy. What do you think it'll cost him? $100 a month? 60? 40? Actually, none of the above. Jim can get a $500,000 policy from a highly rated insurer for under $18 a month. His secret? SelectQuote. SelectQuote is impartial. They'll comparison shop the pick of insurance companies like these to give you a choice of your best prices. SelectQuote has great savings on term life for women, too. Jim's wife, Deidre, can get a $500,000 policy for under $16 a month. SelectQuote has helped make term life insurance affordable for hundreds of thousands of people since 1985. How about you? Just call this number or go to SelectQuote.com. SelectQuote. We shop, you save.
As a home, there are things I'm supposed to do, like keep one of these over your head. Well, I wasn't supposed to need flood insurance, but I have it. Fred over here chose not to have it. Me? I've got a plan. Fred, Fred, what is your plan?
Do I look like I have a plan?
Not really.
Only flood insurance covers floods. For a free brochure, call 1-888-FLOOD21.
We've all heard the stories. Oil companies are thieves. Electric cars are environmentally safe. We're almost out of fossil fuel. Ethanol will solve everything. But are they more fiction than fact? Gas myths. Stossel has the eye-opening truth. Thursday.
Let's take a quick look at TiVo, the DVR company. And as we can see right now, TiVo missed on the bottom line, but beat on the revenue line. Revenue's coming in at about $67.8 million. The expectation was $54.8 million. We're looking at subscription numbers. Their subscription numbers up 524,000. That's actually up 24% year over year. But they are predicting legal expenses will increase in the back half of this year due to trials, perhaps with Verizon. But we are watching TiVo closely today. It is trading just slightly lower in the aftermarket session.
Well, a lot of news to digest for the traders at the CME. Let's go back to Larry Shover to see how they are setting up things for tomorrow. Larry, what's the consensus down there?
The consensus is nothing has changed since the beginning of May. This is a continuation of a broken record market. Nothing has changed. The narrative has remained in place. We go up yesterday, we go down today. But keep in mind, June is a big crossroads month. We have ECB meeting, EU Prime Minister Summit, and the Greek elections. I think we're waiting for a shock and awe policy response that will continue with a shock and awe rally going into the end of the summer, and that's what they're waiting for.
Okay, we do have indications for a much lower market tomorrow, but we'll see what happens. Larry, thank you very much. Larry Shover at the CME.
I'd love to see a steel cage death match between Larry and Mark Faber. That'd be interesting.
Oh, that'd be cool. Anything with Mark Faber.
Shares of a widely held stock hit a 12-year high today before landing in the red.
Let's head back to Nicole on the floor of the NYSE for the details. Nicole.
Looking closely here at Walmart, absolutely a widely held stock as it's in the major averages, right? When you talk about it's a Dow component, hit a 12-year high today. I was almost ready to say 9 consecutive days of gains. It did hit this high today, as we noted. Everybody knows Walmart as the world's largest retailer. It's a great economic indicator. Even though a tough economy, people still go to Walmart, buy what they need, but it finally sold off in the end. But it has been the only U.S. stock that has had the run during a time where we've been selling off. So a great performance by Walmart and a new high today. Back to you.
Nicole, thank you very much.
And it is time for a quick speed read of some of the day's other headlines. 5 stories in a minute. First up, Kayak is pushing back its IPO on the heels of Facebook's troubling public debut. The roadshow is expected to begin shortly after Memorial Day. Meanwhile, Chinese regulators have approved an Apple 3G device equipped with high-speed wireless data capabilities. The approval enables Apple to begin selling the 3rd-generation device. Facebook stock may be hitting a few speed bumps, to say the least, but the company has cleared a hurdle to expand its headquarters. The city of Menlo Park voted to support a project that will enable Facebook to employ thousands of more people at its Silicon Valley campus. And Dunkin' Brands announcing plans to open 550 to 650 new stores around the world this year. The majority of the stores will open outside of the U.S., focusing on the Asia-Pacific region. And finally, a new report showing colleges and banks are raking in millions in fees on student debit cards, but this is many times through secretive deals and in violation of the law. The report says that more than 9 million students attend schools that have deals with financial companies. It's all going to be investigated.